You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody, that music can mean but one thing. It is Friday. It is noon central. It is 1 p.m. in my current time zone, the Eastern time zone. Yes, it is time once again to talk about a little bit of volatility. My name, of course, Mark Longo from theoptionsinsider.com. If I sound a wee bit different, and I probably do, is because I'm coming at you not from the Chi-Town studio, no, but from the Southern studio here in sunny and ridiculously warm, triple-digit Orlando, Florida, for the STA National Conference. You know, this conference has been evolving over the years. When I first went years ago, I was kind of the only options guy in the room. These days, it's like a mini OIC. That most of the exchanges are here. Most of the options personnel are down here. So it's becoming much more of an options event. You'll see as you hear some of the shows. Some of the shows have already hit, obviously, from what we've been recording down here in the studio at STA. More to come. That'll be hitting the pro side first. So some of those are already making their way to the pro. If you want to check those out early, of course, get access to Options Oddities, which is already actually up on the feed as we speak now. I had an early Options Oddities today, as well as so much else. The optionsinsider.com/pro is the place to go to learn more. As we learn who's joining us on the old program today. First, let's go out to the hinterlands of Chicago, where we are joined once again by the once, future, and present Dr. VIX. He moonlights in a little bit of V-Stocks. Mr. Dr. VIX, welcome back to the show, sir.
As always, thrilled to be here. I'm actually kind of glad I'm not down there in Florida with you. It sounds very uncomfortable. I mean, it's like 90 here in Chicago.
It was freaking hot. Whenever they had an event outside, people were, I think melting is the technical term. Yes, it was very hot.
You know, down there, it's not so much the heat, it's just how freaking hot it is.
You know, it is a swamp, so that doesn't help. Yeah. That doesn't help with the when it's triple digits
it's
and
the
humidity. Then you're really feeling it. I don't know if he's feeling it down where he is. Let's find out. Let's go out now to the Southern volatility mecca, known as Austin, home of last year's RMC, where we are joined once again by the greasiest of meatballs, Mr. Mark Sebastian from OptionPit.com. Mr. Meatball, welcome back to the show. Are you going to RMC this year? I believe it's in Utah.
I don't think so, but you never know. Maybe I will.
You can walk to Utah from Texas, right? I mean, it's like a
super
walk,
close,
right down the street. Austin,
super close.
That's how that geography of the Western states works, right? You just walk right over there. Nothing to see over there. As we keep on rolling ourselves, listeners, into the volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, let's get down to business. Time for the volatility review, the portion of the show where we break down what's trading and what's trending and what's going on from unusual activity and all sorts of fun perspectives in the world of vol. And of course, we got another hot one in store for us this week. It was Fed week after all. That usually tends to drive some action, drive some paper. This week, no exception, of course. Half point coming in hot from Powell and company this week. Most people were leaning towards a quarter of a point, even at this time a week ago. We did see a pretty marked shift in the Fed watch in the intervening days leading into the session, where all of a sudden half point was becoming more and more in favor. And clearly that was the right choice in hindsight, at least from a lining up with Powell perspective. Market had some fun digesting it at first. It rallied. Then we saw a pretty aggressive sell-off towards the end of the session. And then, of course, yesterday, the bulls just got the bit in their teeth again, and everything was up strong. S&P north of 5,700, new all-time highs, close to across the board out there. And then coming into today, it seemed like maybe the bears were going to turn it down a notch, and they came in hitting everything. We got back below 5,700 again, which just saying that out loud sounds crazy. It wasn't that long ago we were threatening 5,100 in the other direction, so breaking through 5,700, oh my God. Dogs and cats living together, but we did that this morning. Got down to around 5,680 or so before. It looks like the bulls have the bit in their teeth again, turning the S&P back around. S&P still red right now, off about 0.15%. The NASDAQ still red, off about 1/3%, but it was red across the board. The Dow has now ticked green, up 0.15%. So we'll see if it's one of those days where the early sell-off was a head fake or perhaps a portent of things to come. VIX at about a 1585 when we kicked off the show, so back at a 15 handle. That puts it down about 2/3 of a point from where we were this time a week ago. It seemed like we did a lot of living over the span of that intervening week, but back to 1585. Did you have a VIX of the 15 handle, listeners? I guess we'll find out in the crystal ball in a little bit. VVIX 97, so back down from triple digits, but just ever so briefly down about 3 points from where it was this time last week. So a lot to unpack. Let's go around the horn. Let's start with the once future and present Dr. VIX. First off, your thoughts on our pal Powell and company, exceeding expectations, at least from a week ago, and going the full half point, and the market's reaction from there. And what else is catching your eye on the vol front this week, sir?
The derivative markets were pricing in 50 basis points for some time. And I know most people take a look at the CME group one. The one on Bloomberg, I feel like, is a bit more accurate because it's taking in more than just the CME markets. And that one's been pointing to 50 basis points for a couple of weeks. And I feel like the true volatility event would have been, which is real easy to say in hindsight, but I was quoted in the press saying that if they did face 50 basis points, it probably wouldn't be a huge reaction, and the market would consider it somewhat of a relief because that's what the market wants. And I mean, Powell has snuck this in every once in a while, but he doesn't surprise us that much. I think if you're betting on Powell surprising you, 19 times out of 20, you're going to be disappointed because as much as the poor guy gets criticized, I mean, he is very straightforward with pretty much here's what we're going to do. I mean, I think almost to the point where people start to have to make some stuff up just to make him more interesting. Kind of like, me versus Mark Sebastian. You got to make stuff up about me because I'm nowhere near as interesting as Mark Sebastian.
Does he have raging head trauma? I don't think so. So there you go. Bam.
No, he doesn't.
You're winning. You're winning right there, sir.
But how on that one?
How dare you imply that there are markets outside of CME Treasury, Mark? What are you saying, sir? There's no such thing.
I'm a free agent, and I still get nasty notes from the exchanges every once in a while, but I just call it as I see it, and I'm not bad-mouthing CME. I'm just saying that and it's a great tool, especially because it's free, but it gives you a little bit different forecast than some of the option-adjusted spread stuff that you can get off of Bloomberg.
Yeah, you're right. It was because even as recently, I think, as our vol views last week, it was still leaning almost.
It was really like
75% towards the quarter basis point. or 25 basis points. It wasn't until later that we saw that swing closer to 50. I was surprised at how strong it was towards 25 basis points, quite frankly. So yeah, interesting stuff out there this week from Powell and company. We go down now to the land of the Southern Volatility Mecca, which we have established earlier in the show is just a short, brisk walk from Utah, so he could easily walk to RMC. Mr. Meatball, we talked a little bit yesterday on the option block. If you have any further thoughts on what Powell and company did, surprise, not a surprise, and then B, what caught your eye in the volatility tumult that followed, sir?
Yeah, typically the first reaction is the wrong one, and we ended up kind of up and then down. Going into options expiration, I'm not surprised that we were a little bit bullish going into quadruple witching, especially coming out of this. But you got to wonder, I actually would have liked to seen a quarter basis point relative to a half. I think the half tells me that they're a little more worried about the economy than maybe they're letting on. And a quarter would have just said, hey, we're bottoming. Now we're going to slowly move things. I was looking back. I have not seen a lot of precedent for we raised 14 months ago, and now we're already going to a quarter basis point many times. I don't know, Russell, if you've seen anything like that historically, other than when there's been some issues. So it just has me thinking a little bit. Maybe they're a little more nervous than they're letting on, and I'm wondering if the market, once we're free of expiration, is going to start wondering the same thing.
That was the concern, right? Half basis point signals, look out below, because there's more lurking in there than perhaps we know. Speaking of looking at the past as prologue, I saw an interesting write-up the other day and maybe kind of just shake my head, like, what are we doing? It was an article entitled, I believe it was, How NVIDIA Has Performed During Past Rate Cuts. And I was like, really? Are we doing this? First off, when's the last time we had a big rate cut like this? And then B, it was a very different NVIDIA back then, talking about mobile chips and maybe a little bit of crypto versus now all AI, yet they're somehow trying to tie the two together. But that's where we are right now, listeners. As we keep on rolling, let's see where we are in the volatility surface, shall we, listeners? And spoiler alert, we're down a little bit, but not a ton. We had a SEP, of course, rolling off the board this week, so October slotting into that pole position. And coming into showtime, it was down, but down slightly. In fact, we're down about the same in the OC and the NOBE cycle. Both of them down right around 0.2 of a point. Scrolling on out here through the rest of the term structure, all the way into almost halfway through next year, and once again, there's no 20 handles to be found. Looks like we top out at almost a 1880 back in or out in May of next year. But outside of that, not a heck of a lot going on. Mr. Dr. VIX, sir, what's catching your eye in a gentle drift lower on the term structure this week?
The one thing that I was kind of thought we would see, I didn't want to make the bold prediction, but I thought we might get OC below November after the Fed was out of the way, and that just didn't happen yet. It'll get there, but that just didn't happen yet. So 20-cent spread as I look at it right now, and I don't know what I'm going to be fixated on after October expiration. What will I look at?
Yeah, I know. What are we going to do here? We've been talking
that's all I've been talking about for 6 months. I keep expecting somebody in the chat to pop in there and go, Russell, please freaking talk about something else. I will tell you that the December discount to November is a little interesting. It's only, it's about a dime right now, and normally we see a bigger divot than that. But I wonder if, and I was watching my buddy Cat Temp on Joe Rogan, and they were talking about potential post-election physical volatility. Will there be pallets of bricks dropped off in the big cities again, and all that kind of stuff? So maybe December is holding up a little bit more, again, due to the election uncertainty. And what I do think it's going to take to get that out of there is just a decisive outcome one way or another. I'm personally at the point where I just want to know that night, and I don't care which two of these awful people ends up being president.
I see you're with me in the none of the above camp. It's a
somebody told me they were voting for me yesterday.
Oh, write-in. There you go.
I might register
I like
as a
it,
write-in.
Russ.
Right, and Mark Sebastian, you actually know this person. So.
Oh, really? Well, now you just gave me idea. Now I've got a candidate I can believe in.
That's it. There you go.
There we go.
There
People always tell me
me
they send me a few write-ins every time, but I have yet to count up my write-ins. I might actually have a handful, maybe a dozen votes for president. So there we go. That might count for something, and maybe I can get a free coffee at Starbucks. But yeah, you're right. The pallets. I forgot about the pallets of bricks. Yes, that was all the talk in Chi-Town leading into DNC. There come the pallets of bricks. Hopefully we don't see it, but maybe, you know what? We had fun back in 2016. I don't know, Mr. Dr. Vic, should we do another live election night special? It was kind of fun last time, even if
I've blocked it out.
Did you block it out?
I've got it on my calendar already.
Oh, okay. Look at you. You're planning my schedule for me. So there we go.
Well,
yeah.
You know, I just kind of assumed you would want to. So
it is one of those years this year.
Yeah.
Are we going to see I mean, listeners, if you want some fun, go back and check out in the archives. Maybe we'll repost it, make it easier to find the 2016 live special that Russell and I did. Even that's why I talk about when people say they know who's going to win right now. We didn't even know even that night. Remember, Trump still seemed like a distant long shot. Hillary was still in the lead until you came on the show. I think it was you came on the show partway through and said, "I think he just won Ohio," and that's when it became real for the first time. Like, oh wait, Trump could actually win this thing.
We got really lucky on the timing that evening and the fact that I'm sober.
Yes, that's true. That's true. The soberness helped. Mr. Meatball, sir, what are your thoughts on what we're seeing out here and the term structure and the fact that you're right? We've been fixating on October for so long. We need something else to look at. Well, hopefully we do. We'll see what happens.
Yeah, I mean, I think October is really lining up to start easing off here. I think you're going to start seeing some pressure here. I really like. I think January is the contract I like to own. I like short Ock, long, either Nov or Jan. I think the Nov future is actually the one that's going to move with the election. That's the one that I would actually want to own. I understand the October will kind of reflect what November options are showing, but by October expiration, it's October 16th, I believe. Is that correct?
Yeah, it's an early one.
Yeah, we're still like 3 weeks out. I don't think it'll really have that really well priced in yet. And so I'd rather be trading in November. And really, I think if you want to kind of encapsulate everything, January is going to give you that clean look at kind of the entire process. So Russell, you'll like this. I put on short October UVXY, long January VIX call spreads. That was kind of my my leveraged short-term short vol, long-term own January play.
I like that one an awful lot. I've been looking at the midterm ETFs a little bit as well. Just because they focus on that farther part of the curve, and they're probably not going to have a whole lot of reaction in October and November, regardless of what's going on. But if you're maybe want to have short-term long volatility and longer-term short volatility, you can put that sucker on and maybe offset some of your short-dated long volatility with the drift lower by the longer dated stuff. I got a nice list of things to do always. And what I really want to dig on is, where are we with respect to November option expiration and the election? And November option, I mean, right now, the Friday weeklies are the ones that you probably would start to play, and they're available. We've got November 6th options are right after the election, right? I'm trying to do a calendar thing in my head all at the same time. But if that's happening, and those are the options that people start to take a look at, actually they would be November 8th options. They haven't listed those yet, but they do have options already available expiring the night of November 6th on the SPX, which is the day after the election. So we might be able to start to get some insight from from just the option pricing on those. And the other point behind that is those aren't the options that are going to be feeding into the October expiration. So that might, if you're going to play it and they're starting to make these expirations that are available right after the election, hopefully we know the outcome. That might start to take some of the interest away from the October futures.
Well, there's always interest in what's popping off out here in VIX land, listeners. So let's get to that now. Is it a banger day out there for VIX options? So far, the answer is no. I mean, when you compare it to the ADV, which is continuing to come back down from its ridiculously lofty heights of August, which, again, saying that out loud also sounds crazy. But the ADV is coming in another 68,000 or so this week to 934. Still robust, still threatening 1 million contracts a day, but that puts what we're seeing today, 426, in a little bit better context. We're almost halfway to the ADV. So if you see it from that perspective, it's about what you would expect out there. But you know what's never what we expect, which is why we do it, listeners. It is time for Russell's Weekly Rundown.
Now, Russell's Weekly Rundown. Now, Russell's Weekly Rundown.
All right, Mr. Rhoads, you have the floor. 40 minutes of Russell's Weekly Rundown goodness. Go. The floor is.
Oh, my God. And you know what? We could actually do that.
Is that much? I guess it was a Fed week.
Oh, yeah. No. So the way that I judge the weekly activity is I download the weekly trades from Bloomberg, and you can only download 20 at a time. So I have to download 20 and then, cut and paste and all that kind of crap. This is the first time that I had to download 5 pages of weeklies, and that was from Wednesday. So there was a whole lot of trading. It was horrible trading on Wednesday, though. So let me backtrack a little bit. Nobody traded the weeklies fairly well around the announcement, around the Fed announcement. Mostly bullish VIX trades. In fact, I had a hell of a time. I was trying to offer some guidance to a reporter on Monday and Tuesday around the Fed, and I couldn't find a really big bearish trade in the VIX complex to save my life. So on Monday, trade I really do not like, and I'm going to explain why I don't like this one. Somebody with VIX just under 17. Somebody came in and bought 5,000 of the September 25th 22 calls for 45 cents and sold 5,000 of the September 25th 25 calls for 26 cents. They only paid 19 cents for that. My issue with that, and really my issue, if you're trying to play a volatility spike with options, you're better off just buying an option. You're better off just buying a call because let's just say, VIX had spiked up to 23 or 24 right out, on Wednesday, and they still had a week to go. I don't know. They paid 19 cents for this thing. I don't know how, if they would have been able to get out of it too well. You've got the skew where your short options are going to have higher implied vol than than the long options in this spread. So, if you're going to play something like this, that 19 cents or the 26 cents of income that you're taking in, I just don't think it's worth it. I personally think you want to have something that's very directional around that. It might hurt you a bit more in the long run, but it is what it is. On Tuesday, and this is kind of the trade that I would like. Somebody with VIX at 1759. Somebody came in and bought 2,000 really late in the day of the October 2nd 17 calls for $1.64. That would, if we'd gotten a decent move to the upside on VIX, those would have done all right. I would have preferred the September 25th calls, but maybe they were hoping for follow through. Maybe they've got their eye on something else toward the end of the quarter or something like that. On Wednesday was a huge day. A lot of late day selling of out of the money calls, basically because they weren't paying off. Saw a lot of bailing out on a lot of different out of the money calls starting about 3:30 or so.
which added to the volume there. Nothing really significant yesterday, and then today I did find a trader that had that purchased 1,100 of the September 25th 18 calls on Tuesday. They paid $1.07 for them, and they got out today and they sold those at 54 cents. And again, that those options held their value a little bit. They go off the board next Wednesday, and of course, VIX didn't spike, but and if it had, if they had sold some options against those 18 calls, I just worry about how you go about monetizing that. If you're going to do something like that, you want to go old school Jim Bittman. Bittman used to like to buy a call spread, and if we got a big move in one direction, he would turn it into a bearish spread during the week, expecting that we topped out at some point. So if you're going to do something like buying the 22 calls and selling the 25 calls, 25 should be your price level where you think we're going to top out, and maybe you sell that in the money call and buy a farther out of the money call, and try to play both legs of a VIX spike and a big VIX reversion.
Yeah, because I remember you liked Overby's fly from a few weeks ago.
I did,
not the straight vertical. Not the straight vertical. Not a fan of the straight vertical.
No, again, that one left you some really nice upside. That one was not, if I remember correctly, that one wasn't necessarily pinpointing an event, although his timing was absolutely impeccable. I almost feel like he needs to be Dr. VIX now, not me. But his timing was really good on it. We just got kind of an unexpected spike. I think the trade was on with the anticipation that we would get a quick move up at some point, maybe even through the Fed announcement. I can't remember the expiration dates on those, but it wasn't quite the same as targeting extra volatility around the Fed, and then we didn't get the extra volatility around the Fed.
That is true. It was more of a less situational, I should say. But intriguing stuff nonetheless. I liked it. It worked out pretty well. So I think everyone, all of our listeners who put it on did pretty well on that one. Let's see what's going up, what's doing well in VIX options this week, listeners, shall we? Coming into showtime, we are hanging out 7-3 calls over puts. So puts still fairly well represented in our top 10. They're not quite the 4 we had last week or 50-50 we had not too long ago. But we are starting to come back down the other side of it, listeners. So you'd expect some of those puts to go off the board. Let's start number 10. It cost you 191,000 contracts to break into the top 10 in VIX land this week. So starting to come back to earth a little bit. That gets us to the OCK 21. So right back to a little bit of upside. If you want more upside, how about number 9, 200,000 exactly of the Jan 42 halves. The meatball was saying he likes Jan now. Maybe he likes the Jan 42 halves. He loves a good far out of the money strike. Number 8, 203,000 of our first of 3 puts on the list, the OCK 16 puts. Number 7, 225,000 of the OCK 50s, so right back to the upside goodness. Number 6, 229,000 of the OCK 20s. Number 5, 236,000 of the NOV doubles, the NOV 55. So we are all over the upside this week, listeners. Number 4, 237,000 of the October 19s. Number 3, 259,000 of the OCK 18 puts. Who would trade the OCK 18 puts in October in VIX? I mean, what kind of a madman would have those in their back pocket? Number 2, 272,000 of the OCK 15 puts. Now we're talking 15. And then the big dog out here this week, listeners, a much smaller, obviously, with SEP rolling off the board, 285,000 of the NOV 35s. It's been a while since we've been this light for the number 1 spot, 285. So intriguing stuff, quite the smattering. We're all over the place. We got a bunch of puts, we got 35s, we got doubles, we've got 42 halves, 21s, 20s, even some 19s sprinkled in there, listeners. So you really have an embarrassment of riches on the top 10 this week. Unfortunately, not really an embarrassment of riches on the volume front this week, which again, Fed week, you'd be forgiven for expecting, certainly in the latter half of the week, some paper to kick in. I know earlier in the week we had some lightness out there. Some of our guests in the studio this week were lamenting the just sit on your hands attitude a lot of people were having this week going into the Fed. We didn't see a lot of paper going up, with the exception of Tuesday. I think you can probably guess why in a second. But it was a light week, and even coming out of the Fed, not exactly lighting the world on fire like today. 426,000 contracts on the tape. We are still kind of whipsawing a little bit out there, so you think maybe a little bit more paper, but not today. The big dog today, 95,000 of the OX 17 puts. I hope those blow the doors off. Number 2, 43,000 of the NOV 17 puts. Number 3, 22,000 of the OC 18 puts. Again, only a madman would trade that strike. Number 4, 14,000 of the OC 22s. And number 5, 13,000 of the OC 40s. I don't know. Maybe Mr. Rhoads likes that vertical, the OC 2240. He loves a good out of the money vertical, as we just heard. Thursday, 679,000 on the tape. So again, right after the Fed, we saw crazy whipsaw the day before. Yesterday, of course, was a full-on bullish mode day. VIX historically doesn't love that, and that was the case again yesterday. 679,000 contracts on the tape. The big dog, though, there was a big print. 107,000 of the OC 21s. That was nearly 1/7 of the paper going up yesterday. Then next we have number 2, 61,000, so getting cut pretty much in half of the OC 18 puts. Number 3, 56,000 of the OC 18 calls. Number 4, 38,000 of the October doubles. So you know what? NOV too far for you. You like a little bit of double strike, though? 38,000 of the OC doubles are your Huckleberry yesterday, and the 24,000 for number 5 of the October 30 calls. Wednesday, Fed day. I get it. People sitting on their hands the first half of the session because they're waiting for the big announcement. Second half of the session, we're whipsawing all over the place, balls moving, things are rocking and rolling. You would expect maybe a little bit more paper on the tape than 654,000 contracts. So that's pretty much what we got, listeners. The big dog, again, Fed day. It's kind of crazy. We actually had to double check these numbers just to make sure everything was working, and it was. 44,000 of the OC 19 calls. That is your big dog on a hotly anticipated Fed day where they surprised a lot of people. I won't say everyone, obviously, but a lot of people, and going half point as opposed to quarter point. 44,000 of the OC 19s. That's the best we could muster. Number 2, 39,000 of the OC 19 puts. So 19 strike where the action was on Wednesday. Number 3, 36,000 of the NOV. Oh, here we go. NOV 85s. That's what I'm looking for on a Fed day. And those were all opening in case you needed confirmation of that, because of course they were. But 36,000 of the NOV 85 calls. If I had to guess, that's probably the other half of something that didn't make it into our top 5. In the past, these have been ratios, so let's hope it's some really funky ratio. Maybe they're going back to that stupid we were talking about before. They're just buying all the money strikes. Number 4, we got 35,000 of the OC 17 puts. And number 5, 34,000 of the OC 25s. Tuesday was the big dog. We actually got an M handle for the week, 1.01 million, so just barely making it. Of course, Tuesday heading into SEP rolling off the board there. And 98,000 was the big dog on Tuesday of the SEP 20s. Number 2, 78,000 of the SEP 17 puts. Number 3, 46,000 of the OC doubles. Once again, what's with the 55 strike this week, listeners? Are we in that range again? Are the 55s starting to look attractive? Number 4, 42,000 of the SEP 18s, and rounding out the top 5 on pretty much the most active day of the week, 40,000 exactly of the NOV 37 calls. So once again, we are all over the place. Monday, kicking off Fed week with not really a bang, not really a whimper, kind of a shrug your shoulders. Not even hitting the ADV that day, though. 701,000 contracts on the tape on Monday. The big dog, 54, almost 55,000 of the SEP 17 puts. Followed by number 2, 40, almost 41,000 of the D's 20s. Number 3, 37,000 of the OC 50s. So right back to the upside listeners. Number 4, 37,000 of the OC 19s. And number 5, 32, almost 33,000 of the SEP 18s. So, man, we were all over the place on that paper this week, listeners. Pick a strike, and it probably lit up our top 5 somewhere this week. Mr. Meatball, kind of a strange smattering of paper this week, including, I hate to say the revenge of, but a lot of funky upside, doubles, 50s. Are we in that time of year again, sir? NOV 85s, is that what we're looking at now, sir?
Yeah, It was an interesting week. I mean, it's ahead of the Fed. You expect to see kind of some funky paper. Interesting today, the biggest trade was a buyer of the October 17 puts, outright buy of about 80,000 of them. So to Russell's point, it looks like they bought those and sold. So Russell, you'll like this. This is the biggest trade of the day. They did this kind of near the open. They sold 39,000 of the Nov 17 puts at 196 to buy 78,000 of the Ox 17 puts at 86 cents. I like that as a kind of curve flattener trade. Makes a ton of sense to me. That might be my favorite trade of the week, and it just went up today. We had on Thursday, seller of the OC 18 puts to buy the OC 21 puts on a ratio. Not sure I love that one. Lots of OC 55s. October 30s going up. Definitely another busy one. On the 18th ahead of the Fed, a lot of out of the money stuff. You kind of expect that because nobody knows exactly what's gonna happen. So they're thinking, oh, it's the Fed. I don't know what to do. And then more of that as we head in. Mark, this isn't VIX, but I thought it was kind of interesting. Prior to the Fed, and this is kind of along those lines. It's definitely a vol play. We saw in an ETF that doesn't trade a lot of options, MTUM, Momentum. I want to say it was Wednesday they did the trade. Yeah, Wednesday they did this kind of weird ratio bearish condory thing that points toward, and Momentum basically is, it's high beta stocks that are going to be moving higher, and they were setting up in this nary traded ETF a bunch of bearish put, like a bearish complex put trade. Makes me wonder whether people are getting a little nervous for October.
Yeah, we don't talk about the iShares MSCI USA Momentum Factor ETF that often. Say that one 5 times fast, listeners. I'm guessing not a ton of paper going up there on a regular basis. Let's see, what is the ADV and everyone's favorite? 2,300 is more than I thought. 27 contracts today though, so looking kind of light out there today. But you're right, that is kind of funky. Also, that put spread you talked about was funky. I know for a lot of our listeners, that kind of reverse calendar gives them the heebie-jeebies. They can't wrap their head around being long the near-dated contract and then short the longer-dated one. It's kind of backwards to them. But in the case of VIX, where we're seeing the term structure looking the way it is, that makes a certain amount of sense. So would you say that's your VIX trade of the week, sir, that reverse calendar?
I think that might be my favorite trade of the week. I'd love Russell's opinion on that one.
Mr. Rhoads, are you down with that? And then also you mentioned here in our chat some data you've crunched about historic vol sellers drying up after vol events. You want to share that with our folks?
Let me stick with what Sebastian was talking about there for a second. So I was looking at the Momentum ETF just to get a quick handle on it. What trade did you say you saw? I apologize.
They bought the 190 puts. Sold the 188 puts. The one bought 5,500 of the 190s in OC. Sold the 188s. Sold the 184s. Bought the 182s. 5,500 by 3850 by 3850 by 1650.
And that's going to help them on the downside, correct?
Yep.
Yeah, that's exactly what you would want to do from a fundamental standpoint. And I'm putting on my academic hat here, but you probably, if the Fed's right and we're going to see the kind of slowing that they indicated by admitting that they think they're going to have to cut more than they had been saying they were going to have to, you're going to be more interested in value stocks than momentum stocks. And I think, a bearish position in momentum, it might even be a good hedge if you've got a well-diversified portfolio where that's where you're identifying an underperforming factor over time. In the academic space, everybody loves to talk about factor investing. I honestly had not looked at factor ETFs. Thank you for creating more work for me this weekend. And then you guys were talking about how the volume in the VIX complex has been a little anemic. And, I did work for SIBO for a little while, and goodness knows that whenever VIX volumes were not going particularly well, there was always the what the heck's going on here. I did a little volume study a while back and looked at after we get what I refer to as a volatility event, and we did have a volatility event in early August. It does frighten out some of the volatility, the short volatility guys. In fact, you saw the number of shares outstanding on SVIX go up and then come right back down just a couple of weeks after that volatility spike, where some people tried to take advantage of it, and then some other people just bailed out the best they could. And I think that, and my theory has always been, fewer people that are willing to get short volatility results in VIX or the VIX derivatives being a bit elevated price-wise for some time. So anybody's thinking about doing something longs, maybe not particularly interested. And it just takes a while for all the participants to re-enter the market. And the average I came up with back in the day was 5 months. It always seemed like it took about 5 months before we got back to record volume or close to record volume. After 2020, I think it took a longer time than that. So I don't know if that pattern holds up anymore, but I do think that's what every week that I've been on, and now that I'm on, it seems like I'm on every week, which is great. Don't take that as a complaint. It seems like when you start to go through the volume, you're talking about how it's a bit anemic. I think we had one really busy week since early August, and I'm going with what we figured out back when I was at SIBO. And then, of course, the next step, we were trying to figure out from firm risk management if SIBO as an entity should be doing any sort of corporate finance hedging trades to offset lower volumes after the volatility spikes. We never really came up with anything cool with that. Or if they're doing something around that, I'm not there to do it anymore.
Interesting. 5 months. Yeah. So that's a long time.
It was typically about 5 months, and also that was going through. When I was at SIBO helping promote VIX, volumes just grew and grew and grew, and it was all because of me. Everybody knows I'm being sarcastic, right? But we were on a really nice upward trajectory. That trajectory is not the same anymore. So that 5 month again might not hold up, but we would always see a drop off in volume after a volatility event. Just took a little while.
For the sake of the show, let's hope that data is no longer accurate, sir. 5 months is a long time.
Mr. Trump and Mrs. Harris or Miss Harris, they'll make sure.
We said that last time. We said that in 2016. We said the one thing Trump is not a single digit VIX president, and he turned out to be exactly that. So
it's amazing how he may not have been all that bad, huh?
It's crazy.
I'm staying out of politics, but
if you like a VIX going to like terrible. VIX going to 9 and sitting there forever, I guess, yeah, he was awesome. But talk about a surprise development. You mentioned SVIX. Let's get on to your beloved SVIX. 2860 right now, so climbing that wall back up. I think I have a few vestigial calls in my back pocket. I might have to babysit those today, see where I can get those off. But up 0.6 of a point, was literally hunched right as we kicked off the show. As Russell alluded to, volume kind of coming back down. The ADV is 11,000 contracts right now, down 5,000 from where it was this time a week ago. That's a huge chunk coming off the top in SVIX. They cannot afford to shed 5,000 contracts a day in this product. They need to go the other way. Today, also only 5,000 contracts on the tape. So, yeah, if you're looking for SVIX liquidity to improve, this is not the trend you want. The big dog out there right now, SEP 40s, 3,300 of those bad boys. Looks like they're going the way of the dodo. If we hit 40 by the end of the day today, then something is really going wonky out there. Mr. Meatball, you've been all over SVIX these days with your latest addition to the pit offerings. What's catching your eye out there in SVIX land?
Well, when you look at the numbers, you're saying SVIX should be screaming higher, but then you realize that there's this weird kink from the election that is keeping SVIX from doing that. But if you look, it since kind of bottoming on 9.9, it's up what, call it $3, and making that nice slow progression higher. And on a daily basis, it is moving higher, and I expect that to continue to gain higher. We use a calculation we call our yield zone right now that is in kind of the sweet spot. So we are currently just long the shares.
Yield zone. I like that. It sounds like something at a theme park. They hit the yield zone, dunk the person in the booth. Mr. Rhoads, sir, what's catching your eye? You still long SVIX and writing calls? You up to something else?
Yeah, I got some 28 calls, so I will. And when I say got, that means I'm short. So I'll be down to about a half position. Honestly, I have been pretty much working down all of my positions. I just sometimes I feel like it's time to start things over, and as soon as I get out of everything, the S&P 500 will go down 30% because I've been fighting short with the S&P versus short volatility at the same time, and it's wearing me out. So I've been thinking about doing a reset for the last quarter of the year, and so I probably will not replace that SVIX. I'll just let them. I'll still. Well, I know I'll still have like half a position in it, but I've been taking I'm usually very well invested, like have a bunch of different things going on. And right now I've got the short volatility ETF, I'm short the S&P 500 futures, and I'm short China, and that's it.
Shorted it all.
Normally I have 5 to 10 different kind of macro type positions on, but I've been scaling back a bit. Part of it's I'm doing a lot of conference traveling. I am going to RMC. So
I don't think I am, but I'll have to confirm with the super producer what the travel schedule is. But why would travel curtail your trading? I don't understand, to a conference. Like why would be doing
it all day long? Because a lot of things.
I'm joking. I obviously get it. Okay. I'm not slinging a ton of stuff.
Honestly, I thought you were asking for the audience. I really did. I knew you knew it, but I just I was going into teacher mode, which is what I did.
One of my guests was a little late on right as the Fed announcement was coming out, so I was able to get a couple of VIX trades off in the 5 minutes that I had to spare. But yeah, it's I was out of your UVIX trade, the best weekend ever, because I was traveling that weekend as well. So sometimes the travel comes home to roost. Speaking of UVIX, 430 down 0.2 of a point from where it was this time last week. 16,000 on the tape today. The ADV is 35,000. Doesn't seem like we're getting there today, but you never know. The end of the day could be crazy. Mr. Rhoads, you mentioned you're spooked. You mentioned you're kind of unwinding some stuff. There is some potential for some action over this weekend. Things starting to light up again in the Middle East. A few other hot spots maybe flaring up. Are you rocking the old UVIX weekend trade again this weekend?
Absolutely. So
it does seem like an interesting weekend to have it on. Yes,
it's always kind of an interesting weekend. Every Friday I could probably come up with some sort of hypothetical that's going to help us out. They're not friendly hypotheticals, and people might start to investigate me or have me locked up or something. But in the Middle East is by far always one of them. Those guys are going to keep going tit for tat. I'm just glad that I had just given up my beeper like 3 weeks ago.
I was going to say pager bombers. What are we doing? Are we striking back at 1980? But pager bombers. Who had that on their bingo card for this week? I certainly did not.
You would think that is in front of something big. That's the kind of thing that you would do if you were getting ready to make a big move. So it is possible.
Months in advance, they had to bomb them at the factory before they got shipped over. That was a long time in the works. You're right. There perhaps are other shoes yet to drop.
My dad said years ago once, he said, you just don't mess with Israel.
Well, we'll see. Yeah, pager bombers. That shows a wee bit of patience. Is this your weekend to put on the UVIX trade, listeners? I don't know, Mr. Meatball. Have you flirted at all with this Russell's weekly, or I should say, weekend UVIX trade, sir? What do you think?
You know, it's not. It fits with my strategy. I'm thinking about playing with it. Now that UVIX is down to $4.30. Maybe I will buy 100 shares over the weekend just for giggles.
Ooh, 100 lot. Look at you. We were slinging 1,000.
I know.
Lots.
I'm gonna go crazy, guys.
And we got run over. So maybe 100 lots are the way to go. I'm looking right now at UVIX at the top size positions in UVIX right now, listeners. The big dog, almost 11,000 of the OC5 calls. So I had to go dig because those kind of leapt off the page. I don't remember seeing that many before. And yeah, they started loading up on these back on August 13th. So they paid a pretty penny for these when UVIX was around 588. They paid $2.19 for these 5 calls in UVIX. Wow, that's a lot to pay for calls in UVIX. And they're still open, listeners. So, and UVIX is at a 430. So go.
UVIX is losing about 3 cents a day. So if you think vol's going to hold up, you could sell the UVIX $4 put for next Friday at 10 cents and buy the $5 put call for 15. And that would be kind of an alternative way of buying your play if we get like a real pop.
Doing Russell's way.
Just spitballing here.
Yeah, I have been toying around with alternative ways to do it using the options. You're right. It is a little challenging. Just ask this person who spent $220 on 5 calls how that one's working out. But yeah, I don't hate that nickel outlay. And you're right. Then you're definitely defended against the last minute. One thing I won't be doing is if I do play with it again. I know, Russell, you like buying it a couple of hours before the close. That's too much UVIX delta risk for me. I've seen it whipsaw too many times, a half a point in that, even when it's down around the $4 range. So I like, buy it on close, sell on the open, just only going for the weekend risk. But you like playing a little closer to the fire. You like buying it a couple hours ahead of time, right, sir?
Honestly, it depends on what I'm doing this afternoon. So sometimes I'll buy it shortly after the program, just to make sure I don't miss it. Heaven forbid if I had missed it that weekend that it almost doubled, I would have been. You know what? If I had done that, I probably wouldn't have admitted it to you guys.
Hey, I admitted it. I was traveling. You can admit these things. So, it's a focus.
But I did forget it one time. Thank goodness, not that weekend. So if I feel like I'm going to get distracted in the afternoon, I'll usually buy it shortly after you and I are done chatting. That's kind of been my theme. So there you go.
Yeah, there you go, listeners. Let us know if you're playing around with this one. Have you found a way to go about it that you're comfortable with? UVXY 2384 when we kicked off the show. 31,000 contracts on the tape. That doesn't seem like much for UVXY. Let me re-rack it right now, see if they put up a little bit more paper since we've been talking. And yeah, they're hotter now, actually at about 80,000 contracts now. So it looks like that was some old, I thought that sounded wrong. Old data there, 80,000 contract, which is only 1,000 off of their ADV. Which is down about 2,000. So UVXY, amongst all the vol products we're talking about, managing to maintain its ADV pretty much. So the UVXY Defense Force can be excited on that one. The big dog positions look like they're all, well, there's one pre-split adjusted, 10,000, almost 11,000 of the SEP 25s. So I wonder if it's the same guy. It's about the same paper as UVIX, same size almost exactly. That would be strange if he bought the SEP 25s and the UVIX. That's the case. He probably sold the SEP and UVIX or UVXY. So that could be a decent trade out there. And then VXX, just to round us out of the vol ETPs this week. VXX was hanging out at about a 48 right before showtime, a 47.30 right now, which puts it down about 0.7 of a point out there on the week. In terms of paper, it wasn't lighting the world on fire. Looking a little bit better now. 31,000 contracts on the tape. That compares to an ADV of 33,000, which is down about 2,000 as well. Looking for a size paper out here. We got the same deal. A lot of pre-split adjusted nonsense out here. Mr. Meatball, I know you said you've been a little bit more intrigued by VXX. Certainly when it had its dance back up to nearly 60 recently. Anything catching your eye in VXX or UVXY this week, sir?
Yeah, well, I told you my UVXY trade from earlier.
Yes.
Yeah, I'm dabbling in some VXX here. I think it's worth a look at a potential short here.
You're back to which puts are you eyeballing here in VXX land?
I'm looking in November. I think post-election, if you look at what vol does after elections happen, even in 2020, the VIX absolutely dove. So November looks kind of tasty to me.
Saw somebody playing in Dees a few weeks ago, and they dramatically overpaid for those puts. So sometimes if you go too far out, listeners, and you pay a hefty vol premium, those puts, I think they're still wearing it on those puts. But intriguing stuff. Mr. Rhoads, anything catching your eye in UVXY or VXX? I know your favorite, VXX.
Early, like I said, I'm doing UVIX. I'm continuing to do the trade that I talk about doing. I look at, I really wish I could get a bit more juice for out of the money calls when I do this. And I even experimented around with selling a slightly in the money call that had some time value to it to see if I could trade out of it better than the Monday open. And that didn't work worth a damn. I tried that a couple of weeks ago. That became almost like a stuck trade. Like, what the hell do I do with it now? And I ended up just holding it through the whole week and then exiting it the following Monday. So I continue to try to figure out if I can improve on this thing, and I haven't figured it out yet.
But nothing can improve upon the crystal ball, listeners. So let's head into that.
Absolutely not.
Right now.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, listeners, I was joking at the top of the show, just asking if anybody out there had 15 handle, because I know I did. I was at a 1576, and right as the music hit, right before the segment started, 1586 in VIX land, which puts us exactly within a tenth of a point, exactly within the margin of victory. That's good. I needed a little bit of a bullseye. I'm sure if I re-racked it right now, we'd be moving again. So sometimes you gotta catch the bullet right at the right time. Andrew, I was on the show last week. He was at a 14.99. Didn't quite get to a 14 handle, but you know what? The day is still young. It could still happen. And Mr. Rhoads was feeling his oats to the upside at 16.66. So I get a winner chicken dinner, which feels good being on the road, getting a little bit of bullseye action. So tell you what, I'll let you two both mull, and I shall go first this week, listeners. 1576 is where it was this week. And you know what? We had the big catalyst, obviously. That's what made this week so challenging. Next week, not as big of a catalysts on the board. So I think we could maybe look for maybe a little more, unless, of course, we get this weekend fun popping off like we were talking about earlier. I might say it. I might say 14. I'm going to say 1485 for this time next week. So yes, a 14 handle. I have breathed it into fruition, listeners. Let's see what everybody else has in store. The next closest was Andrew. So actually, it would have been Russell a little bit to the upside. Let's go to Russell then. Mr. Rhoads, what do you have in store for us next week, sir?
Next week, huh?
I'm sorry, you got cut off at the end. What would you say?
I said not a whole lot going on next week, potential news-wise.
Compared to this week, certainly not.
Yeah. 14.99.
Oh, look at you coming right in, right above me, giving me a little bit of breathing room. But
I'm sorry. Where are we? I thought you had said 15 something. I said
1485. You can have your 14.99.
No. I'll do 15.15 just to screw with Mark Sebastian, because I'll bet that's what he was thinking.
He might do that, or he might do 14.41. In which case, I got
15.15 is not palindromic.
I know it's not.
That's repetitive.
I'm giving you 15.51 is what I'm doing.
I'm just debating. Well, at this point, I'm going to go with 1661 so that I've got some room.
Oh, look at you going to the upside, getting all that upside, all that price is right upside action to yourself. All right, listeners, you got quite the range. You got Russell giving me the smooches down there at $14.95. I'm at $14.85.
Nope.
And then Mr. Meatball at a palindromically appropriate $16.61. All right, that is going to do it for us on Vol Views this week. I hope you enjoyed the slew of content coming to you from the Southern studio here at STA. More to come, hitting the pro side first. Options Oddities already up there as we speak right now. An early episode of Options Oddities this week. You know, travel, the conferences always wreak havoc with the production schedule. But we know what, we do it for you folks out there, listeners. So stay tuned to the pro. You'll be hearing a lot of my chats first up there. They'll be hitting the rest of the network. Another good reason to be subscribed to the full network. We love everybody who listens to Vol Views. We get it. But you got to listen to the full network, especially with the new shows hitting. Futures Rundown coming on already at episode 3. 3 years old already. Big number 3. So make sure you're listening to the full network wherever you get this. And, of course, head on over to the pro if you want access to all that other good stuff. TheOptionsInsider.com/pro. And Mr. Meatball, where should they go if they want to talk SVIX or VIX or any of the other fun stuff?
Yeah, just follow me on Twitter at OptionPit, and we'll get it out there for you, folks.
There you go, at OptionPit. Check out some of his archive webinars if you missed the live stuff. And maybe they want to hit you up about that funky reverse calendar in VIX. That's certainly an intriguing one. Not for the timid, certainly. Not for the faint of heart. But if you can handle being long in the front and short in the back, then maybe that's the trade for you. OptionPit.com, the place to go to learn more, at OptionPit on Twitter. And Mr. Rhoads, sir, as you're busy recovering from head trauma, sir, where should folks go if they want to check out your goodness?
Find me on the Twitter, and my full name, Russell at Russell Rhoads. Not really anything dramatic coming up. I think I got a webcast in early October where I'm going to talk about how the short dated index options have been acting in both in Europe and the US. They have been underpricing for months now. So option sellers have been getting absolutely creamed, not just in VIX, but also in the Eurostoxx 50 and the DAX and the S&P 500, the NASDAQ and the Russell. So I think the next big thing I'm going to be doing out there is talking about results in those markets.
There you go, at Russell Rhoads, 2 S's, 2 L's, RHOADS on the Twitter to find him, listeners. That's going to do it for us. Oddities already up, so if you want to check that out, go hit the pro feed. Take the rest of the weekend off. Go relax unless you're rocking Russell's UVIX trade, in which you got to sweat by your keyboard a little bit. Then we'll see you back here on Monday for the option block. I'll be back in the Chi-Town studio by then, all the way through to next Friday, another episode. Volatility Views. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.